Alrighty, gang. What's up? What's up? What's up? How's everybody doing? Look at all those colorful names. It's great to see everybody, man. It's great to see everybody. Romer, Ballas, Chang Chang, Daddy O, Ricky Bobby, Poor Life Choices, Cowboy, Carson Nickel, Nice Afro, Van Anito, Chad Warden, C. Fitzer, DRR, Just Bodies, Richard, Legrand Hacias, an outlaw patriot. Great to see all of you guys. Great to see everybody in the chat box there. So let's throw on the screen and let's give everybody just a couple of more minutes to join in. So here's what we are looking at for today. All righty. So today's lesson is going to be really powerful. I think a lot of you guys are going to walk away from today's lesson feeling really confident and feeling a lot better in your abilities as a trader. I think a lot of you guys are going to start having some light bulb moments go off with this particular lesson. This is actually why I wanted to do this one before any of the other ones that we're going to do moving forward, because you guys have now done, some of you have done the MACD stuff with me. You didn't get any info for the YouTube stream because it's unlisted. If you're not in the Discord, I'm not sharing this information. So this stream is private. So this is only for the people that are in Jackie's Discord. So that's why I didn't get anything for the YouTube stream. It's because it's private. But I think a lot of you guys are going to have a moment because a lot of you have done the MACD stuff with me. And then a lot of you guys have now gone through the RSI lesson, right? And what I've shown on the screen here is just strictly divergence, okay? But what we're going to do today, and how I'm gonna level up your guys' trading with this lesson today, and how you guys are all gonna turn into a bunch of fucking rock stars, is I'm gonna combine all of the lessons that we have done before into this one and share with you guys how you can start using all of the tools that I've given you and all of the lessons that we've taken, how you can start putting that together to become amazing traders, right? Because we're going to build an awesome group of people that are just going to be a fucking force to be reckoned with. That's going to be the Tits Gang. That's what I'm going to teach you guys how to do. And today is going to be a gigantic step in that direction. So now that I've had a moment to rant, I think most of the folks that are listening in here are with us. So let's just get a quick round of GGs and TGs. And can you guys just let me know, how does the microphone sound? Is it loud enough for you guys? Is there anything I need to turn up? Just let me know in the comments, and then a couple more minutes here and we'll fire this up. Just going to read the comments while you guys get through it. Awesome. Great. Great. Good to see everybody then. All right. So guys, all right, we have divergence, okay? And today's divergence, we're just going to specifically be looking at the RSI and the MACD, okay? So we're going to combine those two indicators that a lot of us use every single day. And we're going to do this just so that I can show you how divergences work. But divergences appear on a plethora of indicators. It's not just the RSI and it's not just the MACD. Like, you guys can go through any number of indicators and a lot of them will display the same divergences. The only thing is every indicator has its own unique way of showing divergences. But what you guys will learn here today, you can use this on any indicator. And at the very end of this lesson, I'll pull up a random indicator and I'll show you guys what divergence looks like on that, okay? So the first thing we're going to talk about, all right, is just the types of divergence. Okay, so that's going to be the first thing that we talk about. Now, you guys can see I've labeled trends, right? You guys can see that this is a downtrend, and you guys can see that this is very clearly an uptrend. And we're on the daily time frame on GME, back from 2006 going all the way to 2010. All right, now types of divergence. Okay. We have hidden divergence. Okay. And we have regular / classic divergence. Okay. Now, a lot of you guys are familiar with what's called classic or regular divergence. Okay. And that's basically, right, all that essentially is when you see, I'll say, price makes a lower low, but the indicator makes a higher low, right? So if we look at this right here in this green line, right, you've got a low here and you've got a low here. So this is a lower low. Everybody with me so far? Let me just ask the comments because I really want to make sure that everybody can hear it. Okay. So does that make sense that this low to this low is a lower low? Are you guys with me on that? Right. And then if you guys look at my indicator, right, this is the RSI right here. Right. And this low right here. Okay. So let's circle that. This low right here. Okay. Is this low right here. And then we see we make this low right here, which is this low right here. That right there with that green line from that red circle to that red circle right here, that is what is called classic divergence. Okay, that is the divergence that most of you guys are familiar with, right? Now, what a lot of people don't understand is that there are multiple touches of divergence. And these multiple touches actually add a layer of reliability to your trading. Okay, so you guys can also see that we make a third low right here, which is a lower low. And on the indicator, we make a third higher low. And with those two touches of bullish divergence, that helped propel GameStop into a nice healthy move to the upside. Okay? So that is the divergence that a lot of you guys are familiar with. Does that make sense? Everybody with me on regular divergence? This lessons, I'm going to ask you guys consistently to stay with me, okay? So just make sure that you just give me yeses or nos. And if you have a question, stop me because this is really, really important. And I want to drive this home for all of you guys, okay? Because this next week that we have is going to be really important for you guys. So I want to make sure that we're doing this lesson right here and now so that you guys are prepared for next week. So a lot of you guys seem to understand that that is regular divergence, okay? And then Ricky Bobby asked, does the third one only need to be higher than the first low? I prefer personally, when I see this low here and then this low here, I personally only care that it's above the one next to it. Okay, even though it's above this one as well, which you could also call divergence, that's completely fine, right? I just care about this one to this one. And the reason being is because, and this is a great question, Ricky Bobby, thank you for bringing this up. The reason that I really only care about this low to this low, right, rather than skipping this, right, and just saying, well, this low to this low, right, you could say that. The reason I care more about this right here is because of how the RSI is calculated. The RSI is calculated based on 14 candles, right? And if we use our little measuring stick from this low to this low is 28 candles. So is the RSI really calculating that as divergence? Technically, no. But if we go from this low to this low, suddenly it's only 10 candles. And 10 candles is within the calculation of the RSI, which would allow us to see that bullish divergence. Okay? Does that make sense, Ricky Bobby? You with me on that one, buddy? Because that's a great question. That's a great question. All right, sweet. Good. Okay, so you guys understand that that is bullish divergence, right? You guys understand that that is bullish divergence. Okay? Scott, I will come back to that. Don't worry. I'll come back to that, I promise. So you guys understand that that is bullish divergence, right? Because it comes in at lows. So that's actually a good little cheat that I used when I was first getting into my trading, okay? Is that bullish divergence is always at lows and bearish divergence is always at highs. You can always keep that as a little cheat sheet in your mind. Bullish divergence only happens at lows. Bearish divergence only happens at highs. That's an easy way to remember it. Okay, so We know that that was bullish divergence, and we know that that was classic divergence, right? Now, the other type of divergence we have is called hidden, right? Hidden divergence. And hidden divergence is when the indicator extends while price does not. So what does that mean? Okay, let me show you an example right here. Okay, so these two different examples on the same chart, okay? So this first green line right here, you guys would agree with me that this low to this low is a higher low, right? You guys would agree with me on that, right? And Ricky Bobby, I'm going to touch on that question in a bit as well. You guys would agree with me that that's a higher low, right? I want to make sure that all you guys are with me because hidden divergence is very different. So just, even if you just type GG in the chat or just even give me like a single letter, that's all I need. I just want to make sure you guys are following with me, okay? So you guys all agree that this is a higher low. But then when we look at the indicator, look at this, you guys, right? Look at this. The indicator made a lower low. What the hell? Right? And so when I tell you guys right here, hidden divergence is when the indicator extends. When the indicator extends while price does not. So you guys saw on this push down, the indicator extended beyond the prior low. Right? This was a lower low on the indicator, but a higher low on price. That right there, okay, is called hidden divergence. That is hidden bullish divergence. Okay? That's what that looks like, is when the indicator extends while price does not. So the indicator extended beyond that prior low, but price did not extend beyond that prior low, and it generated a higher low. And that is what hidden divergence looks like. And then for bearish hidden divergence, okay, this is a touch of hidden bearish divergence between this red line right here. Okay, you guys would all agree with me, yes or no? This high to this high is a lower high, correct? You guys all agree with me on that one, right? And again, I'm only doing this just to make sure that everybody understands. Okay, great. Everybody's with me. Perfect. It is a lower high. That's right. But if we look at the indicator, right? Look at the RSI, right? Look at the RSI, okay? From that high to this high. What the hell? The indicator went higher, but price didn't. That's the indicator extending while price does not. And that is what hidden bearish divergence looks like. Okay? Do you guys all understand the difference between hidden versus classic divergence? Does that make sense, you guys? Is everybody with me on the difference between those two types of divergence? Awesome. Now, there was a couple of questions, right? Scott Baker, I didn't forget about your question. I promise I'm coming back to it. But I saw another question, and it was a great question, once again from Ricky Bobby. And Ricky Bobby asks, was there some type of thing regarding regular divergence? Is there something regarding regular divergence that tells us that maybe there's a reversal coming up? And that's a fantastic question. Okay? Because, all right, with these divergences, our hidden and our classic / regular, they actually have two other names. Did you know that? They have two other names. Did you know that hidden divergence is also referred to as continuation divergence? Did you guys know that? Have you ever heard anybody other than, I'll say myself, refer to that as continuation divergence? Probably not. It's a rare thing to hear that said. Okay, some folks know this, right? But they hide it behind a paywall for $399.99. Okay, but continuation divergence. So guys, let me ask you a question. Okay, I want every single one of you that's listening to the stream right now, I want you guys to answer this question for me, okay? In an uptrend, would I look for hidden bullish divergence or regular bullish divergence? Answers in the comments now, please. Hidden or regular in the uptrend? Okay, excellent. A lot of you guys answered hidden, and that is correct. Now, let me ask, I'm going to look for one word from all of you guys. Why are you looking for hidden divergence? You are seeking what? Answers in the chat box now. Let's see. Perfect. All right. Great. Perfect, you guys. Excellent. The continuation of the trend, right? Exactly. So the reason we look for hidden bullish divergence in an uptrend is because we seek continuation of the trend, right? And so in our examples here, right, I've shown the RSI in which price makes a higher low, but the RSI makes a lower low, giving us hidden bullish divergence in an uptrend that allowed price to make a very significant push to the upside. And then once again, it has a retracement and it makes a lower low. But then we see price here. And this right here makes equal lows. Okay? This is regular divergence, right? Not continuation divergence. This is regular divergence, right? And so we look at this and we say, well, I thought we were trying to seek the continuation of the trend, right? And you're absolutely right. We are trying to seek the continuation of the trend. But sometimes you don't get what you want in terms of the proper divergences, right? And so what we look for when we don't get what we want is we turn to other indicators for help. And we say, do those indicators confirm the same things that we see on the chart? And we open up the MACD and we pull it up a little bit and we look at the histogram and we say, well, this is a low and this is a lower low. So that's actually a touch of bullish divergence as well. So a touch of bullish divergence between the MACD and the RSI is kind of giving us a little bit of confirmation that, hey, maybe there's a reversal here, right? And I say reversal, okay? The reason that I say reversal is because look at what happened here. You had a low here, and then this low here, which was not lower, right? That was equal or a higher low, whatever you want to call that. But then this happened. And that was a lower low. And that was signaling that maybe we were going to start a downtrend. But once again, using our indicators, not just the RSI, because maybe we wanted one more layer, right? Maybe we wanted one more layer to help us out. So we opened up the MACD as well, and we saw two indicators with that same touch of regular divergence. Regular divergence, right? Lower low here, indicator equal or higher low. And that allowed for a nice propulsion to the upside. So we looked for that hidden divergence while in the uptrend, seeking the continuation. And then we saw classic divergence when trend looked like it may shift. What is classic divergence referred to as? It is referred to as reversal divergence. Reversal divergence. A reversal of a potential trend shift. And that's what saved price here before making a huge move to the upside. Okay? Now, this is where I'm going to start adding a little bit of the layers of the things that you guys have learned. Okay, so a lot of you guys have started to, before I move on, let me read the comments quick. Poor Life Choices says, I thought we called the RSI the truth teller. Why does it go lower to confirm bullish continuation? Because what that does is it shows exhaustion. That's what hidden divergence is. Okay. This is how we identify hidden divergence and what it does. So when the indicator extends lower, right? So we're in this uptrend and you made this low here and then price made a nice push to the upside and then it started pushing down and then the RSI went lower, right? The RSI went lower and it was like, so spooky, right? But then we used all of our common sense and our information, right? And we said, well, it's still above center. And that's bullish, right? Because it's in the upper half. And then we know that there might be that hidden bullish divergence. Well, what does the hidden bullish divergence tell us, right? Because all of these indicators, all they do is they tell us something about the people that are trading, right? That's all this is, right? The indicators just tell us information about the people who are trading this asset, right? That's all it is. And so when we look at this, right, we say to ourselves, what is that indicator trying to tell us? When you see hidden divergence, what it's trying to tell you is seller exhaustion or buyer exhaustion. Okay. So when you see hidden divergence, what that's telling you is bull or bears used every ounce of energy that they could muster to try and slam price down. That's why you see the indicator extend beyond this prior low. They tried to do everything they could to slam price down. And that was the best that they could muster. Meaning that bulls are very clearly sitting there, willing to protect price in this uptrend. And we see that reflected in the indicator based on the weakness from the RSI, as well as the hidden divergence that RSI displays to us. So it is the truth teller of price, and it's telling us the truth about bears. Bears are bums, and they got smoked here. And we saw that reflected through the truth teller when this period right here, where we had this reversal divergence, this regular divergence, right? This was a retest of the center. This was just a retest of the center line. And so long as we confirm the center line retest, GameStop was going to make a big breakout. And that's ultimately what happened. And so the truth teller of price told the truth the whole time. We just had to make sure that we interpreted that correctly. And we did. And we used the information at hand to help us make a great decision. And that's why these indicators, this divergence that you see on the RSI or the MACD or anything like that, it displays information with regards to bulls and bears. And how weak are they? How strong are they? That's also displayed through the RSI and how fast this thing moves upwards and how fast it goes down, right? Look at this little piss dribble. This didn't do jack fucking shit as displayed by the RSI. And then look at the speed at which this thing moved back up. That is a huge and strong, powerful move with divergence, bullish divergence strapped on right behind it. So that's how those indicators display the information for us. Okay. And then Scott Baker says, what time frame? Chad Warden, I missed that one, buddy. Scott Baker, what time frame is best for divergence? I'll say this so you guys ask this every lesson, right? And I say the same thing about it every time, whether it's the moving averages or the MACD or the RSI or whatever it is that you're looking for divergences on. The larger the time frame, the more reliability that it has. Now, I don't really look at the monthly and say, oh, bullish divergence on the monthly. That sometimes some time frames are just too large. But like your weeklies, your dailies, and your 4 hours have the most reliability. And then you guys have to imagine, like, as you start zooming in and zooming in and zooming in, the information that is displayed in the candles and then displayed through the indicators is less and less and less and less and less and less and less. And less information means less and less reliability, right? So that's all that is the larger the time frame, the more reliability that you will have based on the information that is presented within those candles. All right. So do you guys understand, right, the hidden / continuation divergence? Right now, I want to show one more example here, right, because we just looked at this. Now, I showed you guys that this was downtrending, right? You've got your high, low, lower high, lower low. So we're seeking the continuation of a downtrend here, right? And when we see these highs right here, right, these are clearly lower highs. But we open up our indicator, that's clearly a higher high on the RSI, like very clearly, right? And all this is telling us is that bulls mustered every bit of strength that they could find, and that's the best that they could do. A center line rejection with hidden bearish divergence and just a complete destruction of price from that moment on, right? Price got fucking creamed from that moment on. And that was displayed using simple hidden divergences, right? And so that's why with these divergences, we look, at least with hidden divergence, we look for the continuation of the trend. Okay, so I'm going to take a moment to pause here and just ask, is everybody with me so far? All right, good. Okay, so then you guys heard me refer to the other type, right? Regular/classic divergence is referred to as reversal divergences. Okay, it's referred to as reversal divergence. So when you see the divergence that most of you guys are familiar with, that is called reversal divergence. And so when you see reversal divergence in a downtrend, that is typically what leads to a healthy move to the upside. Okay? Now you guys can see on the indicators, this is the exact same example that we've used since the beginning of the show here, right? You've got a low, a lower low, and a lower low. And then you've got a low, a higher low, and a higher low. How many touches and what type of divergence is that, you guys? Let's see how many of you get this correct. How many touches of divergence are there? And what type of divergence is that? Okay. So we've got poor life choices. We've got Stony. We've got those two with the correct answer so far. All right, Carson Nickel. All right, so those of you that said 3, we're arguing over like nothing. Okay, so the true correct answer is technically 2, right? Because this low to this low is 1 touch of bullish divergence, and then this low to this low is a second touch of bullish divergence. And then if you want to refer to it as the other name, it's 2 touches of reversal divergence. And those 2 touches of reversal divergence, let me ask the chat here really quick. Did those happen in the bull zone? Yes, or excuse me, did those happen in the bear zone? Those touches of divergence? Yes or no? Y or N? Yes, you've got it, XYZ. You've got it, buddy. Okay. So you guys all agree that those touches did happen in the bear zone. Now you guys will see if I zoom out a bit here, there's a little note that I wrote for you on the bottom. The best divergences, the most reliable divergences, are found when they happen in the control zones. And so you guys will see when I turn on the indicators, 1, 2 touches inside of the bear zone led to a beautiful reversal on GameStop share price. And then you guys will see as well, right? You guys will see as well. Okay. We have 1 touch, right? Between these highs here. You have 2 touches, right? 2 touches of bearish. What kind of reversal class? What kind of bearish divergence is this? You have 1, 2 lower highs on the RSI and 2 higher highs on price. What kind of bearish divergence is that, class? Think of the names, guys. Think of the names. Think of the names. Think of the names of them. What are the 2 names that we called them? What are the new names that you guys call for divergences? Think of the names. Yes, Stadio. Thank you. Yes. Yes, Ballas. Yes, yes, you guys. Yes, 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 yes. The correct answer is bearish regular reversal divergence, or bearish classic reversal divergence. And you guys will see what happened after those 2 touches of regular reversal divergence. Bye-bye. Right? And then you guys will see continuation divergence was found when the price began to move down, right? It would make a low, right? Look here, let me circle this because this leads into a much larger conversation. You have your high, your low, lower high, lower low, lower high, lower low. This is a downtrend, right? This wasn't a downtrend when this type of divergence happened. It was on a macro scale, but we're zoomed in on a micro, right? We're on a daily when we're trying to look at this high to this high, which are months apart, right? This high happened in December. This high happened in April of the next year. So like you guys understand that we can't use the daily to find divergence between this high and this high, but we can see the trend. And so we see reversal divergence up here, creating a lower high. And when it makes that lower high, it starts to go down. And when it starts to go down, you seek continuation divergence. And you can see that found right here where it makes that hidden divergence, that hidden continuation divergence. And then it was good night to the share price. Okay. Now, does everybody follow with me so far? I'm going to just take one moment to pause here really, really quickly. I'm just going to make sure. Does everybody follow with what we had looked for so far? Haha, Outlaw Patriot. Nice. Yeah, I think you understood what I was trying to throw down, my boy. I like that. Right? Because, guys, Outlaw Patriot, I think, has one of the most underrated comments in the chat box so far today. Okay. His comment says, so hidden divergence typically follows regular divergence. Isn't that just a beautiful statement? Because guys, listen. Let me draw this for you visually. Okay, so this makes sense for you. I don't know why I put a bunch of fucking link things on them by accident. All right. So look at this, right? Let me draw this. A high, right? A low. A high. A low. A high. A low. That's a trend, right? That's a downtrend, right? And in between every lower high is a low, right? Every single one. Even though price is a piece of shit, it never just goes straight down, right? And so when people are watching a stock and they're like, oh, that thing's a piece of shit, it's just going to go down. And then it bounces right in their fucking faces, right? Why is that? Well, because there's a trend. And things don't just go in a straight line. And so between every lower high in this little range that we've looked at, there was a low and there was a lower low. But each one of those lows propelled price higher. And those propulsions higher allowed you an opportunity. If you shorted here and it came here, you cover the short, it comes back up, you reload the short because you follow the trend. And the same thing can be said on the flip side, right? Between, now let me make these green so it's better to see. So you have a low, a high, a higher low, a higher high, a higher low, a higher high. Let's just go up here. Fuck. this is an uptrend. And between every low is a high. And between every high is a low. Just a higher low and a higher high. And so you know that there has to be some type of divergence. There has to be. There has to be divergences between these lows that propel them to highs that then propel them to other lows or other highs. But there has to be divergences between them. And so I just thought that that was a fantastic comment. Because does hidden divergence typically, because he said, so hidden divergence typically follows regular divergence. And that's exactly right, because regular divergence gives us the reversal. And the hidden divergence gives us that continuation. And then when we seek the continuation, you start to see signs of a reversal. Whether it's the RSI putting in higher lows in the bearish control zone, right? Just like this one right here, right? Between every high is a low. And between those lows is divergence. Reversal, divergence, preparing us for a move to the upside. And that reversal divergence gives us another touch of hidden divergence, which then propels us into a low. And that low did not give us bullish divergence because it was a higher low. But you never defeated this prior high that you made here. And even though you didn't really have any divergences between here, you never defeated this high. And then it led to a breakdown in price. And you can see, broke the EMA, lost the center line into the bear zone. And then look at what happens as you enter the bear zone. You get touches of bullish divergence. And that helps propel price up and out. Now, this final one, right? This goes back to that original question asked by Ricky Bobby earlier, right? Now I'm going to go back around to Scott Baker's question. Okay, so look at these divergences, right? You've got a touch of divergence between these lows. Okay, so this low to this low. Then you've got another touch between this low to this low. And then this one is not divergent, right? These ones are not divergent because that is a lower low and the RSI did make a lower low. And so this is where it goes back to Ricky Bobby's question, right? Ricky Bobby asked, well, what about that original lows that's made? Do we still look at that? And this is one of those instances where you would, right? And you would say, well, even though it looks like it's breaking down, it's still a higher low. And it's still within the bearish control zone, making that large divergent touch with multiple touches in between. So you would assume at that stage that perhaps if it did find support and start breaking out, you could draw this as a potential third touch of bullish divergence, reversal bullish divergence that led to an explosion in price, again, because they happened within that bearish control zone. And again, I do say explosion in price. I'm just so you guys are aware, like this was a big move. And again, all happening in the bearish control zone. You guys want to know how I called bottom in November? Look at, right? Let's just move the lesson over just for a second. Look at this. This is how we called the bottom back in November, right? When everybody was super bearish and blah, 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 blah. Look at your divergences, okay? You have between this low to this low, okay? And then you have this low to this low. And then you have this low to this low. Then you have this low to this low. Then you have this low to this low. 1, 2, 3, 4, 5 touches. 5 touches of bullish divergence on a daily time frame in the bearish control zone. This was like free money back in November. Like literally this was free money back in November. And then you want to see what happened like literally just recently that all of you guys could have done because you're literally better traders than every fucking idiot on Twitter and YouTube. Look. That's bullish divergence. Like a ton of touches of bullish divergence. There's like a handful of touches of bullish divergence here. It looks even better on the 4 hour. Look at the 4 hour. Look at this. 1, 2, 3, 4. 4 touches of 4 hour bullish divergence. Right? And so that's why I'm like, okay, well, that's how we called bottom this time around. So maybe trading GameStop actually isn't all that hard. You just got to do technical analysis on it. And maybe that's why technical analysis has been pushed to the side on GameStop. Sorry, I'm getting a little off of hand with the divergence lesson, but you know, like, look at the technical analysis has clearly worked on GameStop. You guys see it with your own 2 fucking eyes. And everything that you guys are learning here today is going to give you the ability to do this. So now you guys are all learning, hey, look, all the fucking idiots and clowns that I've followed on Twitter and YouTube and whatever else actually don't know what they're doing. And we could have literally just done this. How is that last one divergence? Okay. Let's get rid of this. Okay, so this low here, this is the body candle close. That's the lowest close. And then this low here, which is the candle low close here. So you can see that there's a difference between this low to this low. That's a lower low. And then you open up the indicator on the 4 hour on the RSI and you see this low here. And you see this low here. And this is a higher low. So this is bullish divergence. That's hidden. That's classic bullish divergence in the bearish control zone. And I'm doing today is the divergence lesson. No GameStop. I'm doing it later tonight. You guys will get your little crack. You'll get your little crack fix. Don't you worry. All right, back to the daily, back to the lesson. Okay. All right, so let me just get a quick round of GGs or TGs in the chat, and let me just make sure that you guys are all following along. You guys all with me so far? Every bit of this has made sense so far? Now, let me just ask, instead of GGs or TGs, is this helping? Do you guys, is this starting to have a couple of little light bulb moments go off here? Is this starting to make sense, you guys? Yes, master. Yes, master. Don't worry if you don't get it on the first time, guys. Believe me, it's gonna take a bit for it to all kind of sit and soak in, especially if you're relatively new to trading or just trying to pick all this up. Right? You'll rewatch the video, pick up a couple pieces here and there. Okay. All right. So the last thing I'm gonna touch on. All right, the last thing we're gonna touch on is the types or the classes of divergence. Okay. So there are 3 classes of divergence. Okay. There's class A, class B, and class C. Class A is your best divergence. Okay. It's when the indicators or price have significant variance. So what do I mean? I've shown and drawn you guys a little example here where you guys can see this is price. So price makes this high, comes down, and then makes this much larger high. And we see with the class A divergence example, price makes a high to this high, comes down, and it makes a significantly lower high than where price made a significantly higher high. The difference between that significant high and this significant lower high is called class A divergence. It's when those indicators make a very significant variance between what happened on price and what happened on the indicator. Okay, so a great example of this is, let's see. This is really a great one. Let's see. Let me find a good one here. I want to find the best one that I can. Let's see. Okay, there's a good one. Okay. All right, so we look at our indicator here on the RSI, okay, and we see this clear high here and this very clear higher high here. But we look at our indicator and we say, well, there's that first high here and there's that second high here. Holy cow, there's a big difference between this high to this high because the RSI was at 87 here. And when it came down and made this higher high on price, we actually only got to 77. You dropped 10 points on the RSI. That's a lot. And so that is referred to as Class A. It is a wide variance of the touch of divergence, okay? And then you have Class B, okay? Class B is a large touch of divergence, but not quite the same size as Class A, okay? So it's still a large touch of bullish divergence, but it's not as large. The best example is right down here, okay? So we can see that price on this example made this low here, and then we had this low here, okay? And we look at our indicators, and we see this low here and this low here. So this is a higher low, and the indicator didn't really move too much. It went from 28 to about 32, 33, okay? So about 5 points up. So it wasn't a lot, but there was a touch of divergence, all right? And then the last touch is Class C, and Class C is your weakest touch of divergence. And that's when the indicator makes basically an equal or equivalent low. So you guys can see here, we made this low to this low, right? This low to this low. And you can see that the indicator basically makes the exact same low. Okay, it basically makes the exact same low. So while price made a decent lower low, the indicator basically did not budge. And so this is our weakest type of divergence. Typically, right, with these weak touch of divergence, you need to see other classes of divergence behind it. Fortunately for us, we had this low, right, because this is where the candle actually closed to this low, right? And then we had this low on the indicator to this low here, which was a Class B divergent touch. So you had a Class B on the first one and then a Class C on the second one. And that helped propel you with those two touches of bullish divergence into this high that GameStop made, which was ultimately a lower high. But blah, 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 forget all that, right? So does that make sense in terms of your, I'll say, classes of divergence, you guys? Does that make sense on the classes of divergence? And you're right. A lot of them do have Class C at the end of them after multiple touches of divergence. That is correct. It's a very interesting thing to note. All right. Seems like a lot of you guys seem to understand that. All right. So that's what we look for, right, when we're looking at divergences. Okay, that's how we spot all these different types of divergence. And this is how we help it aid our trading. Okay, so I told you guys that we were going to combine a couple of different things to show you how you use all these things in combination. Okay, so one of the first things I'm going to share with you is how we do chart patterns to help us identify, right, potential moves or reversals. So in this example here, right, in this example on your left-hand side, now you guys saw, right, that we're in an uptrend on this left-hand side of price, right? These are very clear higher highs and higher lows, right? So we're in an uptrend. And in this uptrend, right, we circled these touches of classic reversal divergence, right? And then we saw price make a breakdown, right? But here's where we're going to start combining a little bit of our skills, right, into everything. So instead of all those touches of divergence, and then once we've now had price start to roll over, right, we start seeking the continuation of the trend, right? What do we do to seek the continuation of the trend? Look at this. There was a wedge on the RSI. even if you want to draw it like that, there was a channel on the RSI, and at the bottom, it broke out. And then bang, 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 bang. And then not only that, you guys, not only did the RSI form a wedge for us to follow and seek the continuation of the bullish uptrend, but guys, look at the pattern that it made. I mean, that's literally a rounding top. And a rounding top is the number one bullish reversal pattern, but we're seeking continuation, right? Well, a rounding top is the number 4 bullish continuation pattern. So the number 4 bullish continuation pattern with an RSI wedge in a bullish uptrend. Ding, 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 ding. And that's how we always stay winning, right? That's how we always stay winning. And then look at what happens, right? Then we're going to use another example of one of the lessons I've taught you guys with regards to the RSI. Ignore the divergence. Ignore the divergence. Once we made this high, right, which was a higher high from this one, right? What happened to the RSI, guys? What happened to the RSI right here? What did it fail to do? Tell me, what did it fail to do? That's right, Sammy. Great job. Exactly. It rejected that bull zone. It rejected the fuck out of that bull zone. And that's how we caught that reversal. We entered the bull zone here. And then even though we wedged out and we broke out, all that strength couldn't even get us back into the bull zone. That signaled that bulls were in trouble. And then look at what happens. Price breaks down and makes its first lower low for the first time in 7 months. It makes a lower low. But within that lower low, we had a whole bunch of touches of bullish divergence, which propelled price higher. But then when price made that higher high, guys, what did it fail to do again? Somebody tell me. What did it fail to do again? Tell me. You guys already know the answer. What did it fail to do? Say it. Say my name. Say my name. What did it fail to do? Exactly. 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 It failed to enter the bull zone. And if it failed to enter the bull zone with touches of bearish divergence, you guys, what would this be? What's this? What's that? Somebody tell me. What is that called? What is that? Exactly. Exactly. That's a lower high. And guys, what's this? What's this called? What's that? What's that right there? Somebody tell me. What's this? What's between these two here? What's that? Perfect. And so when you have lower highs and lower lows, guys, what's that called? What do we call that? Ta-da! Isn't that fun? Isn't it fun learning? Isn't it fun learning to trade and making things easy? So, okay, you guys want a little GameStop preview. Okay, fine. Okay, let's make this easy. Guys, what's between this and this? What is this? What is that? Okay, good. Lower low. Perfect. Now listen very carefully to what I'm about to tell you. Okay, listen very carefully to what I'm about to tell/ask you. If we fail to break this orange line, which is the highest body candle close on the daily, what would this be? Okay, good. You guys understand. Perfect. Okay. Now, instead of being a gay bear, right? If we broke this orange line this week and we closed here or here or here or here or here, I don't care. If we closed anywhere in those green circles, what would this to that be? Okay, good. You guys understand. Now, if we made a higher low, tell me, how many times since the sneeze events, how many times have we made a higher high on GameStop share price since the sneeze? This is not a higher high, just so you guys know. The way that this candle closed is not higher than this high, just so you know, okay? I'm pointing that out for you early. This high to this high is not a higher high. Okay, so what have you not done since the sneeze? Exactly. You've never once made a single higher high. Not a single higher high has been generated on GameStop's chart. Not a single one. And so you guys can imagine, right, now that I'm going to turn this on and zoom in for you guys, okay? You guys can imagine how very serious the implications of what could happen this week are. Right? Because you know, as well as I know, as well as all the hedge funds and all the shitty short sellers and everybody else, right? You guys know just as much as I know that if you make a higher high from this one, it will be the very first time that we have ever done that. Okay, and we can look at this objectively, guys. Look, I'm just looking at it from a weekly time frame. Okay, this is basically all I'm looking at. If we zoom in here, okay, these highs are basically like dead ass equal. Like it's like a penny, right? It's quite literally like a penny or two. So if you guys want to argue with me that this is a higher high, sure, but we're arguing over pennies. The point being is that you basically have not generated a single higher high within this trend. Look, you got this, equal, lower, and then question mark, right? If you guys want to argue over a couple pennies on this one, that's fine. I'll argue with it on that one too. But my point really is, okay, is that we have not defeated this higher high. But my point also stands that when we zoom into the daily time frame, if you break that high, we will have done something that we essentially have not done for like 3+ years. And then beyond that technical analysis, right? Beyond that technical analysis, if I open up the indicators that I have on our charts here on the weekly time frame and I turn off the drawings, I open up the moving averages. I talked about this on Friday, okay? Now, I'm going to zoom out on the chart and we're going to ignore this bit of price action, okay? Because this bit of price action was already above the weekly 50, okay? That's what I'm watching. So I'm going to zoom in from when we broke it right here in November of 2021, okay? So tell me, you guys, and I did this on Friday, so some of you guys have probably already answered this before, okay? How many times has GameStop share price opened above the weekly 50 period moving average, the blue line on your screen? Outlaw Patriot, you're a legend. Calvin, Bursky, Rob M, CL, and Trevor, all gifted memberships by our dog. Thank you very much, Outlaw Patriot. So you have actually only opened above the weekly 50 period moving average one time on GameStop's price since November of 2021, excuse me. You've only opened one time, and that's this candle right here. Oh, okay. Nope, that's a lie. It's twice. It's my bad, okay? Because technically you did actually open above this one right here. So this one here opened above the weekly 50, and then the following week also opened above the weekly 50. And that was back in August of 2022. And you guys remember August, that was when GameStop had its big summertime run. And that was kind of the last time that a lot of us really got excited about GameStop, right? But the point being is that this time right here, when we got above that weekly 50 period moving average, you just made a fantastic explosion to the upside. And now I want you guys to look over as we zoom out here. Look at what we did. Look at what we did on Friday. We closed above the weekly 50 for the first time in 2 years. First time in 2 years, you closed above the weekly 50 period moving average. That is not insignificant. That is not insignificant. That is incredibly powerful. Because look at how this moving average has acted as a brick wall since all the way back in August. Look at it act as just literally, it was a fortress. 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks touching the 50 period moving average and then breaking down. 1 week where you perfectly touched it and then dumped. 1 week, smashed into it. Next week, death. This weekly 50 has been a proxy for GameStop's trend ever since the January events. And you've broken above it for the first time in 2 years. This is very, very important. And this week going forward is very important for GameStop. Okay, but I don't want to give too much away. We got a video to make and blah, blah, blah. So that's where I'm going to go with that. Okay, so we're done with the divergences lesson. So let's get around to GGs and TGs into the chat from everybody. We're done with the divergences lesson. That's what I've got. Hopefully you guys have found that useful. So give me a round of GGs, TGs. And listen, if any of you guys have questions after this lesson, don't be afraid to ask them in the Discord. And don't be afraid to message me if you have some questions about it. Okay? Now, let me just ask the chat box. Let me ask the chat box before I disappear here. Do you guys want a GameStop video? Or do you guys want a GameStop live? Because I could do a live video like 30 minutes from now, or I can just make a video for you and call it a week. And we can do a live. Up to you guys. All right. Live it is. Okay, I'll see you guys in 20 minutes, all right? I'll see you guys in about 20, 30 minutes. So get ready for that, all right? I'll see you guys out there. And to my to my members, man, thank you guys all so much for being out here. I really appreciate you guys. And to Outlaw, thanks for gifting those 5 memberships for our local legends in the chat box. Thank you very much for that, my boy. And yeah, I'll see you guys in about 30 minutes, okay? And this video will be posted in the Discord in the Trader Education section for everybody. All right, so we'll see you there. GG and TG.